Let me now bring on board Mr. K.K. Mistry, Vice Chairman and Chief Executive Officer of India's largest mortgage company, that's HDFC. KK, morning. Thank you for joining us. KK, the consensus on the street is that after SCR cut, Reserve Bank of India today may not oblige with a repo cut. What is your sense?
See, I think short-term interest rates have gone up very substantially in the system, and that is the effect of the lack of liquidity which is there in the system. So we have an inverted yield curve where it's cheaper to borrow long-term money than to borrow short-term money. Now that cannot last, or to my mind will not last for very long. So once we get into the new financial year, liquidity will re-enter the system, and short-term rates, in my view, have to come down. So short-term rates will come down in the natural course by the time we get to the middle of April or maybe second week of April, and RBI rate cuts thereafter will only help the situation.
KK, hi, morning. There's a lot of concern about what the government's borrowing program will look like for FY13. Well, the market is hopeful that it will be at best, only a number of 5 to 6% higher than FY12 borrowings. Do you believe this is too optimistic of you, given that little is being done by UPA 2 to address the subsidy burden?
I don't know. I can't put a number to it, and we'll have to wait till Friday to see what that number is. But that will depend on the fiscal deficit. So what kind of fiscal deficit was left behind is what will determine that.
KK, so what are you expecting from the budget, and given the kind of global and local backdrop we are in, do you think Finance Minister will find it almost impossible to keep the fiscal deficit under check?
I think so. I think we'll see more of fiscal consolidation, and I think any budget which shows a deficit of 5% or under 5% will be very well accepted by the market. But if we see a 5.3, 5.4% deficit, I think the market will not like it. And the other thing is it should be based on a growth expectation which is realistic. So if you base it on a growth of say 7%, we are fine. But if it's based on a growth of say 8.5 or 9%, the market will not find it acceptable.
KK, particularly from your point of view, what is it that you're expecting for the financial sector and housing finance companies like you?
We're not really looking for anything in particular, but you must bear one thing in mind, that this tax benefit on housing loans for interest, it's been there for a long time. It's been nearly, 8 or 9 years since the limit of 1,50,000 was fixed for the interest payable on housing loan. You know, the interest that you pay on a housing loan is tax deductible to the extent of 1,50,000 rupees. And this limit has been in place now for the last 8 to 9 years. And obviously over the period of 8 to 9 years, property prices have gone up substantially. The need to borrow money therefore has also increased. People are borrowing larger sums of money. So there is a lot of rationale, a lot of need to increase that limit from 1,50,000 to say 2,50,000 rupees.
Okay, real estate developers are facing a severe cash crunch. Is there a possibility of relaxation in FDI norms and ECB borrowing, which may help real estate builders in order to overcome their current liquidity crunch?
I'm not sure if ECBs will be done, but some relaxation on the FDI front is possible. We have to wait and see.
KK, raising the FDI cap in insurance has been a long pending demand from the financial sector. Again, something that the government has failed to deliver on. How hopeful are you that this could come through in FY13?
Very honestly, I don't think it's likely. We'll be very, very happy if it comes. But chances of that happening in the budget, I think, are not very high, given the fact that, this has been referred to a select committee, and it's not going to be very easy to pass it in Parliament. So realistically, one should not expect that it will happen now. Though if it happens, it would be a tremendous boost. Tremendous boost. You can get a lot of foreign direct investment come in. You can get a lot of money come in from overseas. But realistically, one should not expect it to happen right now. And honestly, this does not necessarily have to come in the budget. This is something which can come on its own later on.
KK, a lot has been spoken about the importance of low-cost housing, but very little effort has gone in that frontier from the government. Are you hopeful of hearing something in this year's budget when it comes to low-cost housing?
I don't know specifically what kind of SOPs can come in. I'm sure there are a number of suggestions which have been made and where something or the other could come. But I think they would do something for the affordable housing segment, because if you see the last couple of years, there has been a lot of focus on affordable housing. Now, if you take HDFC itself, our average loan size in the current year has been 19 lakhs and 20,000 rupees. And if you take a property, if you take a loan-to-value ratio of 66%, which is what our loan-to-value ratio at origination is, you're looking at a property value which is somewhere in the vicinity of 27 to 28 lakhs. Now, 27, 28 lakhs is a pan-India number, which includes a Mumbai or a Delhi, where property prices naturally would be much higher. So if you look at outside of Mumbai and Delhi and outside of the big metros, the average loan size would be much lower, the average property value would be much lower. So effectively, we are giving money to individuals who are buying apartments in these so-called affordable housing projects. So any boost to them would definitely be hugely beneficial.
KK, we've also seen a few interest rate subventions and subsidies coming in the past few budgets. Do you see the government persisting with such moves?
I'm not sure if subsidies is really, frankly, really too much of an answer. If it continues, it continues. But I think more than subsidies, some kind of benefit to the homeowner in the form of some fiscal benefit that he gets on the interest that he pays. That is, I think, the key. The other thing is, you had this concept of for retired people. If you have people who are old, there is this concept of reverse mortgage which exists in the Western world. Now, in India, we don't have a reverse mortgage concept at all. And the reason we don't have a reverse, or we have it in a very limited manner, is because the tax laws in India are such that it's just not conducive to have a reverse mortgage product. In the sense that when in a reverse mortgage product, a loan is given to elderly people, where the loan amount is not dispersed in one tranche, it is dispersed in tranches over a period of time. And then the recovery of the loan comes when the two people, the husband, wife, or whoever who have taken the loan are no more. And by selling the property, you recover the loan amount. Now, the problem here is that the interest that you receive on, the interest that you accrue on these loans, you are only accruing interest, you're not receiving interest. The interest that you accrue on these loans as a company gets taxed at the time when gets taxed on a year-on-year basis, even though you have not received the money. So therefore you are paying tax without receiving money, which creates a negative cash flow. So to compensate for a negative cash flow, you actually need to have a higher interest rate to compensate the company from the tax that it has paid out, which defeats the very purpose of having a product like that. So something for senior citizens, something for retired people, some benefit of that nature would be good. But I don't know whether it will come in this budget or it will come later.